Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, April 4th, 2019. In this video, we're going to cover the REITs. That's the Real Estate Investment Trust sector. That's IYR is the most liquid ETF in that sector, first to market. So we'll focus on IYR and the top components, keeping in mind that the REITs are one of the components, one of the 11 sectors within the S&P 500. And because of that, I'm doing a video sharing these as potential trade ideas, potential setups. Ready to pull the trigger. There are some what I think to be beautiful setups here for not just quick trades, trend changes. So I'm going to go over those charts, and the reason I'm holding off on adding these as official trade ideas is let's grab a chart of the markets. We just can't, this market can't give us a solid sell signal. We had the breakdowns below those trend lines. If you watched today's earlier video update, we broke down, and here's that minor support line right here. We need to take out these lows, and so far that hasn't happened. This is ES, by the way, guys. S&P 500 E-minis. So we broke down, we back tested. NQ went a little farther, but ES is just holding the line right there at that first support level. Can't even make it down to the second so far. So that can happen any minute. I want to get this video out for three reasons. The video on the REITs. Number one, first and foremost, is a trade idea. Whether you like it, you want to take it now, get a head start on it. If you agree with the analysis, maybe scale in. Number two is to just kind of present it. It's one sector within the S&P 500, and if the broad market reverses soon, whether it's today, tomorrow, a month from now, these setups that I'm sharing today are still valid. These are patterns in the making. In fact, we don't have sell signals on the majority of stocks I'm about to cover. And I'm hesitant right now to continue to add shorts that have any correlation with the broad market and with the REITs as one of the 11 sectors. This is what I need to see more here. I need to see more on this daily chart, especially the weekly chart right now with the bulls in control on SPY above 282. So that's I just wanted to kind of start out there because it is related, and you can see what happened with NQ. There's that level, the breakdown that I talked about today, breakdown back test right here, the 60-minute channel, broke the minor support, but we went on to hit my first target there, first support, 75.1945, and that's where I said, if you're a dip buyer, that's where you want to step in. If you think the market's going to new highs, or even as a day trade, you're going to get a reaction off the initial tag at each of these levels usually. And so whether or not we close there, now that's the level to watch. But of course, we've regained that minor support. So hence, I'm holding off now on this IYR SRS trade. But I think the charts are compelling. So let me say this: if you are interested, you can probably watch the first 5 minutes of this video. We're halfway through that, and I'm going to just cover the IYR and one of the trading proxies that you can use, SRS, which is the 2-time inverse short. Yes, you can leverage up to 3 times short with DRV and DRN. I think DRN is the inverse and DRV is the 3-time, but be careful. Leverage cuts both ways, and on this sector the decay can be pretty vicious, but I want to talk on that, so there's going to be an educational bit here as well. All right, first let's look at the charts on the sector first. This is IYR. This is a 2-year daily chart. Pretty simple stuff here. We had a divergent high here. So you watch these trend lines. The REITs move in trends. Some trends are different. This is a choppy trend. It was tradable within this range, long, short. But finally you worked up. You had a divergent high right here, negative divergence. You had a breakdown, and then boom, from the highs. I measured the lows, the corrections from the lows to highs. So 14% after that divergent high drop, 10% drop after this divergent high. And, I pointed out, I guess at the time we had a evening doji star. Excuse me. There's an uptrend line, no divergence, but still a clean uptrend line break, and that was a 14% drop. These numbers I'm going to show you in a second here, and talk a little bit about decay, how it can work. The leverage can work for or against you on those leveraged ETFs. And then finally, here we are. We've come full circle. Nice clean divergent high. PPO is still pointing up, and I look at this chart and a lot of these components that I'm going to go through, and I can see, just like the broad market, the potential for one last final thrust. This is already at new highs, whereas the broad market is a little shy, and so pop to test or just slightly take out those highs in the S&P 500, followed by a reversal, would also play well into the chart patterns that I'm seeing here as far as short setups. In other words, these divergences could most certainly be extended at this point. So again, no sell signals. We have a couple red candles, but nothing that stands out to me as a a solid short signal. And there's an uptrend line, a minor uptrend line to watch. And what else I want to show? AD, that just means almost divergent high. When we were melting down in December, on the December 24th video, I showed, actually the line should be a little lower. There it is right there, because I'm going right at the previous reaction low. So I pointed IYR out as a potential long play there. You can see we had a low right there, exactly on that line, almost a perfect double bottom low. AD means almost divergence. You had close to being equal lows here. They were slightly lower, but much lower lows in price. So that would have been your divergence line drawn like that from the previous peak. And if I'm not mistaken, we had SRS as SPG, one of the REITs, as a trade somewhere in here, a long trade. All right, so that's IYR. There's the technical case. Let's see if there's anything to mention on the weekly. No, I didn't mark it up. So let's look at SRS. This is again the 2-time ultra short. It's been around a long time. It's been around longer than DRV and DRN, and it makes for a great trading vehicle if you're in at the right time. Now, of course, you want the trend going with you. This is an inverse ETF, meaning you want the REITs falling. That's a given. Otherwise, the trade's going against you. But where you don't want to hold this one is in choppy sideways periods. Why? I can show you very easily what happens if you hold this one for a long time. This is a 10-year chart, 10-year weekly chart. You can see all the reverse splits. The decay on this thing will ruin you. It will destroy you if you hold this ETF for too long. As you can see, my crosshairs will show a pop-up box to the left. You lost almost all your money if you bought it 10 years ago, 96.55%. Yes, the trend was going the other way, but not to the tune of almost 100% loss. And that's just, again, it's the decay. And you can read about that under the resources link on the top menu of the site. Under there, that's our support center. There's an FAQ page. And under ETF related questions, there is a question that explains the math on how this decay works. It's simple math, and the thing is, I also, you'll read about on the internet, other people talk about this, how horrible these are for long-term holds. However, I go on to write about how they're actually better. They outperform in certain market conditions. They outperform the underlying index by the amount of their leverage. In other words, this is a 2-time or 200% leverage. So if you get the call right, you not only don't have decay, but you can actually do better than 2 times the underlying. These aren't the best examples. I've done other charts with other 3-time leverage ETFs because there's a little back and forth here, but what you want to do is get in and out on these with these unidirectional trends, the sharp moves. Sharp moves usually come from breakouts on very bullish chart patterns like bullish falling wedges. So we're looking at a 2-year daily chart here of SRS, which is just IYR flipped upside down, if you will, of course, with the leverage. So when this one's rallying, IYR is dropping. So here was a divergent low. From that divergent low, that point there, just like I measured on IYR, up to the highs, it was a 32% gain in SRS, yet only a 14% drop. So according to that, 2 times the drop in IYR would only been a 28% gain. So you outperformed going short, a double position of IYR. You would have been better to buy half the amount of SRS, tuck it away. Here, nice, clean, bullish falling wedge pattern again, and they correlated with the bearish patterns that I showed you on that other chart of IYR. Nice, clean divergence, everything you like to see confirming a wedge breakout, and then from the low right here, that was the low at the divergent low, to the high, a 21% rally in SRS versus a 10% drop in IYR. And here was one, this is an even better right here. Nice, clean, what I call a unidirectional trend, meaning not a lot of chop and slop and give back to get from point A to point B, almost a straight ride up. SRS gained 31% versus a 14% gain in IYR. So again, not huge outperformance, but yet still outperformance, and you only had to put in half the amount of capital to get the same or better returns. And now as far as the technicals go, what I see, what stands out to me is, again, going back 2 years, I see 1, 2, 3 periods where we had nice, clean, positive divergence. The other two right here led to 32% and 21% rallies. Actually, that 21% really made a double bottom and then eventually a 31% rally. So would I expect anything less from here? No. In fact, I can tell you right now, you can see some targets I've added if you already want to, get in this, or at least, again, I get this video out, you have this chart in front of you, in case something quick happens in the market or in this sector, you can pull the trigger before I get the time to, mock up a chart, identify the price targets. These are my initial targets here. They're the actual resistance levels. I have not adjusted these for an optimal fill. So in other words, if I were to be targeting only this target, or let's say my plan was to do this, let's say I wanted to micromanage this trade on the way up and book profits T1, maybe buy back in at a lower level, come on up to T2. What I would do is 23.88, I'd adjust that downward, let's say take profits about 23.82, maybe somewhere in there. Again, 5 cents, 6-8 cents lower there, and expect this to play out somewhere along these lines. But over time, the decay eats at these charts, so I like to correlate these price targets with what I'm seeing on IYR. But I think that's a very doable swing target right there, and that would represent, from where we're at now, roughly a gain of about 14 or so percent, and it could certainly be more than that. In fact, quite possibly all the way up to this level here, and that would be about a 26% gain. So this one's on watch. And now what I'll do is I'll roll into a list of the top components. Let's go back to IYR. That will load my watch list here. Off the screen to the right, I have a watch list. I'm going to sort these by market cap and show you the went the wrong way. Here it is by largest. Okay, so these are the largest weighted, the biggest companies, I should say, in IYR, the biggest REITs: AMT, American Tower, Simon Property Group, Big Mall Company, and then down the line. I'm not going to hit them all. We'll go down to here at about this one here, maybe Realty Income Trust, just to show you, because those are the big heavyweights in the sector. And then I have flagged some other ones that stand out. And so the third part of this video really is for those of you that prefer to short the most bearish stocks within a sector. If you have enough capital and time to manage, let's say a half dozen or more names within the sector, I truly believe that you can outperform whatever drop the next correction in IYR is. You can outperform the sector by avoiding the most bullish stocks and then focusing on shorting the most bearish. Because remember, the benefit of an ETF is diversification, safety, and numbers, but that cuts both ways. Just like trading the broad market. You go long or short the S&P 500, you're long the most bullish stocks in the sector or in the market, and you're also long the most bearish at any given time. So that, kind of works both ways. You're not going to get clobbered on a big gap down or a news-induced gap on an individual, like you can on an individual stock. That is when you trade the ETF. So let's move this off to the side and start out here. AMT, the daily charts really on this one not jumping out to me as anything major. In fact, you can see we don't even have divergence. We do have an extreme overbought reading. So what I'm going to do on this one, I'm not going to do it on all of those. Flip out to the weekly chart here and show you what stands out to me. All right, just ignore these lines for a second. These are potential divergences, but these are the things that stand out. So over the last decade, we had 1, 2, 3, 4 divergent highs here on the weekly time frame. We actually had one here. I control. Well, not there. Let's just focus on these. And those were big drops. They don't look like much, but those were certainly double-digit losses for this company. Very profitable on the short side from high to low. And now what does stand out, I have these arrows here, these white arrows. And what jumps out to me on this stock is it has only been extremely overbought. These are overbought readings when you cross that red line, the 70 level. And look, if you follow them up, each and every one of those, for the most part, led to pullbacks. And if you really want to get in there close and measure it out, I'm sure that's a 10, no, about 8% drop. It doesn't even register on this chart because there's such a big move on this stock. But I can tell you, almost each and every one of these produced a swing tradable pullback, and some of those were in the low to even higher double digits. Now, so what stands out? Let's put up another line here, right here, and we'll call this the extreme overbought line. Every security is different, so you have to look at it. I don't just say, okay, overbought, because when I see this one, sometimes overbought becomes much more overbought. So there's that orange line, and it shows me that in the past decade, AMT has only been this overbought 2 other times in history. Those 2 other times were right here, and it didn't mark the top, but it did mark a correction, which I'll measure out for you right now, and I'll do the same right here. You can see we take the crosshairs. Let's go to take those off. This drop here was good for, it's really hard, you have to zero in and get those candles. That was a 10% drop, and we had this overbought reading right here, and that was good for a, let's see, that was right there from high to low, almost a 10% drop. There it is. If I can click, I have to snap to that line. There it is. Yeah, exactly, 10.07. Okay, so both of those were 10% drops, and the stock did go on to make another new high after that, and then had an even bigger drop. So let me put these lines back on. So there's a possibility there too, and this also kind of meshes with the market going to new highs thing, where and that may or may not happen. We also have a trend line break, so you get a we don't have a trend line break yet, but a trend line there. So break of that trend line, a back test of the trend line. See right here, you had it, breakdown, back test of the trend line. We had a breakdown and a kickback rally, never made back to the trend line. Breakdown, back test of the trend line. So that's something to look, that maybe we get, I think, at least a 10% correction coming in this stock. If the market happens to sail on to new highs, then I'll be looking for this scenario to set the stage for the even bigger drop, which is probably 20% or more, I'm sure, when you measure from here to here. That was the ultimate move down on that one. Okay, we're going to fly through the rest. It looks like actually my last official trade, or last trade I must have, whether it was official or unofficial, was back here in 2018. T4, T1, T2, 3, 4. So you had this bullish falling wedge. Again, these are the things I look for the trend trades. Divergent low, breakout back. From that divergent low, you had, it was a sloppy trend, but it was an uptrend. It was a nice gain, divergent low. That was your total trend right there. That ended with a very clear, unmistakable divergent high right there. In fact, we had 2. We had a divergent high up here at this point. You can see the negative divergences at that point. Correction number 1. Had a kickback rally, put in an even larger divergent high, and then the bottom fell out of Simon. That was a drop of almost 17%. Where are we at now? Not quite yet a divergent high. PPO is rolling over. We don't have to get that. You can look back right here, for example. There's a lot of corrections on this stock that don't come with divergent highs. So divergences aren't necessary by any means. They're just something you look for that increase the probability of a lasting trend reversal, whether they're bullish divergences at a low or negative divergences at a high. So I will say this, not one of my favorites. Just chart doesn't jump out, but it is one of the market leading REITs. And we'll go through some others. And now, as I rifle through the sector, you're going to see a lot more. And I'm not going to go to point out everything that happened in the past. You can see some of the charts I marked up the previous divergences or already had those. But right now, I want to focus on these. This is a very steep, and to me, the word steep, as far as a wedge goes, it's a steep wedge, very steep trend line, a very steep rising wedge. And to me, in my head, I see the word steep, whether it's a downtrend, fall down, just like think about the drop down into the December 24th lows, or a steep uptrend like this, equals dangerous. Dangerous means usually when these things break, they don't just limp around, have a little correction. They usually, the move out of it is usually as impulsive as a move leading up to the top. So the steeper the trend line, normally the steeper the correction, or the faster and more powerful the correction. So CCI, as like I said, a lot of these haven't triggered, but they're right on the verge. One bad day in the REITs could take us through here. And I've seen this sector, sometimes it just starts out with a bang, kind of a big 4 or 5% drop in the sector itself, and a lot of these stocks do more than that. So what I recommend, if you like any of these names, replicate the charts. put on log scaling. If you don't put on log scaling, you're going to get a slightly distorted picture. So I use log scaling on these. Set a price alert. Here, I'll do that now. Set alert. And when it breaks that trend line, you'll get an alert. Targets, you can see right there on this one. PLD, wedge, divergence. I'm just going to go through these fast now. Well, here, I'll go back so if you didn't get a chance to see that. PLD, you can see the divergent highs in the drops. There's your rising wedge. There's your negative divergence. No sell signal yet, but it would come on a break of that wedge, and that's PLD. PSA, public storage. What are the circles? Well, there's another extreme OB reading, overbought reading. 76 is the magic number for this one. 70 is overbought, overbought. Sometimes you get sell signals there, but without fail, this chart goes back 2 years, and you can see all my circles. I didn't exclude any, and that was a very near touch there. I could lower that line a hair and then hit it, but you can see without fail what happened. And this one, if you let's say you shorted right here, what happened? It came in and made an equal high right there. If you had a stop placed a little bit above, like you should, you never got stopped out. So you milk this whole. Well, it depends. I'm just showing you from top to bottom. I know it's virtually impossible to get the very high and the very low, but I'm trying to show you where these overbought readings, what they led to. This was more of a pullback trade here, and again it fell a little shy of that level. Then we hit an extreme overbought reading, didn't stop till the stock got here, and now we've come full circle. So the ones that had actually hit that yellow line were here and here and here. So I think nothing less than this coming for that stock. And then those two lines I have are really, they define a big multi-year sideways trading range. This stock spent a little time below it right here back in 2018 and a little bit above it here, but for the most part it's been between there. So that gives you from where we're at right now swing target of about 11% or so. EQIX, nice clean bearish rising wedge, doesn't get any much better than that. The only thing this thing is lacking is a sell signal. WELL, that's Well Tower, same thing, clean uptrend line, lots of reactions to validate it. There's your divergences. What else could you ask for except a breakdown, of course. AVB, wedge, divergence. EQR, sort of more of a price channel right there with divergence. DLR, uptrend line, wedge type pattern. Not one of my favorite just because I see a lot of supply down below. I don't see thin zones. I'll try to highlight the ones that stand out to me. But this again, I'm going down the list in descending order of market cap, so it kind of gives you an idea. VTR, 59.66 first stop, and again I haven't spent a lot of time marking these up to try to hone down the targets. This one I'd have to move up there. I see a reaction. That would be my probably my first swing target right there, down to 57, possibly come down to 51 on that one. SABC, that's SBA Communications, nice clean wedge, really getting stretched ahead of itself, overbought, extremely overbought there recently, and divergences, everything you want to see. So that one has a lot of meat on the bone, I think, a lot more than some of the others I just covered. And as far as targets, I'll certainly see some reactions along the way, but I think it works its way down to 174.23 or so, and that would be a drop of about 12%. Realty Income, this one's starting to crack right now. Let's just give it the benefit of the doubt here. There it is. Even if I give it the benefit of the doubt, this one's breaking support right now. But remember, guys, birds of a feather flock together. So if you short this guy and the sector continues to go up and doesn't break down for another few weeks, it doesn't mean this one can't play out. It just means you'll be swimming against the tide. You want the tide or the wind at your back, and that means you want the sector on breakdown mode and moving lower as well. Also keep in mind that the REIT sector has different subsectors. This one, for example, if you can see down here, it's a retail REIT. Some are medical offices, some are apartment complexes, apartment rentals, things like that. There's all different types of REITs. All right, now I went through the top, what is that, dozen or so. I'll just go through a few more that I have that I've marked as some that stand out. CSGP, CoStar Group, there's a nice wedge. There's your targets right there. Any and all of these that are marked right there I think are potential targets. Let's go down the line here to VNO. Nope, I must have flagged that one by mistake. I'm going to unflag that, or it was already flagged before I did this video. Invitation Homes, INVH, very steep wedge, and on top of that, you can see I haven't even finished marking all these charts up. There's your divergence lines right there. And what this one's doing is it's testing its all-time high right now, trying to pop above it, but not impulsively. And I talk about this a lot, and this is exactly what my thoughts are on the broad market. I've done this long enough. Anything's possible. I could be wrong here, but when you have an extended rally and you're very overbought and you haven't consolidated a lot, and that's why you're overbought in an extended run, and you come and try to break out to new highs, 9 times out of 10, if not more than that, that breakout's going to fail. It doesn't mean you're going to have to collapse, but it's going to fail, and then at best you probably have to work off the overbought conditions. So that's why I think there's very little risk in the broad market, in my opinion. If I had to sail around the world for 3, 4, 5 months and either be long or short the S&P 500, I'd be short, because I think at best it's got about another 3, 4, 5% to pop the all-time highs, give everybody what they want, and then reverse and either crater or consolidate. This stock, same thing. It's had a heck of a run just to get up to test that previous high. And is it possible that it can blast on and go up another 20, 30% without looking back? Again, anything is possible. Is it likely? No, extremely unlikely. So I would bet on a failure here and a breakdown of that trend line. And I'm not going to give you a target now because I'd have to study that chart more. WPC, WP Carrying Company, nice wedge. There it is. Not much more to say to that. Negative divergence. The only thing I would add, you can see that would be my preferred target down there. Come back to that 72.40ish level with a stop along the way here somewhere around 75.70 or so. SUI, clean, bearish rising wedge, negative divergence. Not much else to add to that one other than one more level here, and this is how I see this one playing out. Yeah, like this. Breakdown, reaction off the 114.50ish level, come on down here, 108.84, finally come on down to 103.65, and maybe things look good, look at it for a long at that point, but again, first things first, and that would be a breakdown. ELS, Equity Lifestyle Properties, that's a residential REIT wedge, target 1, target 2, let's just leave it at that, 107 as my preferred swing target with a sell signal to come on the trend line. In fact, I'll probably go through and set alerts on all these, and I can tell you what'll happen. Done this enough that they'll go off like popcorn. If one of these alerts goes off that I'm setting on these trend lines, either on that same day or within the next few days, unless there's a whipsaw on one company, but usually the sector's going to reverse and give a sell signal, and then boom, 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 they all pop at once. And that's why you can trade SRS or IYR, because in this sector, birds of a feather do tend to flock together, and so they'll all probably break down within around the same time period, and therefore SRS and IYR will switch trends and probably be an easy, again, certainly an easier way to trade than trying to pick a dozen or half dozen of these stocks that I'm covering now. But if you like these setups, I'm going through some. I had some of these flagged that shouldn't have been. That's why I'm skipping over those. NNN, this one's starting to crack, but see, that's not a very well-defined trend line. I only have a couple reactions there. However, I do think divergent high, everything else I see, it's probably going to come back here to 51.36 at least. GLPI, oof, look at how steep this trend line is. And there's that example I gave earlier about the steeper a trend line, the harder they fall. This trend line is about as steep as they get. That's a near vertical ascent, and when it broke, this thing didn't limp its way down. It dropped. Let me tell you exactly how much it dropped here, and how quick it fell. So if I can grab the high there with my there it is, grab the high, come to the low, and tell you that one fell in just 24 days, 17 trading sessions. It dropped 7.5%. So we have a very steep uptrend line once again. The only difference between now and then, we didn't have a divergent high. This was just a rip, an overdone rip. It was overbought. Now we have clean, solid negative divergence. So I think the next drop will come back down at least to that level, possibly more. So that one certainly stands out if you want one with above average gain potential. All right, I think that's it. I didn't go through each and every one. There's so many here. There's a lot of components. In fact, 115 stocks I have as components of IYR. So I went through, I don't know, the top third of them or so, maybe the top half, and just showed you some of my favorites there, as well as the top components. So certainly one to keep an eye on. And so I've gotten the video out. You know, if something big happens in the market, and it's a busy day, and I'm throwing out other trade ideas, it's possible I say SRS is an active trade idea. I'll throw up a chart and maybe follow up with price targets or you know, stop parameters, that kind of stuff, if there's not time, because again, in the right market conditions, these things can move really fast. You're a day or two late into SRS at times, and you can, you know, that can make the difference of missing out on, you know, 5-8% or more, and therefore you're denied an objective entry. You know, here's a case right there where it shot up pretty quick. So we'll see. This is again a pretty powerful wedge pattern. No no buy signal on SRS yet, because remember, it's a ultra short ETF, so you don't short it, you go long, you buy it to gain short exposure on the REITs. All right, we'll wrap it up here. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.